Welcome to episode 3, and in this video we're actually going to start getting into the complements now and actually start teaching this model. So in this video I just want to go over the bias of the model and give you some examples of what we count and what we don't count. Before we get started though, I do just want to tell you there are two variants of this model. There is the hybrid and then the full mechanical model. In this series I'm going to be teaching you just the full mechanical model, because the hybrid has some discretion for the bias, so I just keep that for like people in my Discord, and if you want to learn it then I can help you guys out with it, but it's just, if you're doing it wrong then it can be difficult. It basically though just encapsulates the daily, 4 hour and 1 hour, whereas the full mech just looks at the 4 hour. So for the full mech, we're just looking for bias for the most recent. So for the 4 hour, so for the full mech, we're just looking at the most recent significant 4 hour breaker structure for the bias. So it's super simple. So let me go over some examples of this. So currently in this moment for Nasdaq, if you were trading it today, we would be bullish because most recent break to the upside from that fractal, okay? So it can't be any break structure, it needs to be from that fractal. So we'd be bullish today on Nasdaq. Going over to EU, if you trade EU, you should be trading EU. Take a guess what bias we'd have today. Bullish, yeah. Because look at this, most recent break to the upside. Boom, bullish. Super simple. If we go back to here, I don't think I have the replay tool. Replay. Oh, fuck off. So no, I don't have the replay tool. So if we go back, let's just pretend we went back to this date. The bias would be bearish. So most recent break is to the downside. Okay, and again over to here, the most recent break from this point would be bullish because the most recent break is to the upside. So what doesn't count is 1, a breaker structure without a fractal, so it has to have that fractal above it, and 2, if we go through wicks with a fractal. So let me try and find an example here. So this would work, but it's a little bit difficult to see. See these two wicks? We get the fractal, we'll wait for the break to the downside to change bias to bearish. We go through a wick. We don't count wicks. It needs to be a body closure. Okay? But if we get, let me try and find a better example of this. Okay, so then the next thing, if we get a breaker structure, like we're waiting for the break to the upside, let's say, okay, we reset it if it's got a fractal on top of that wick, okay? And we keep doing this until we get a break through a body closure like this bullish candle did. So then we'd be bullish. Okay, and then another thing to mention is if we go through wicks and then a body closure, we count that because this doesn't have a fractal on. So look, we go through these wicks, but that's fine because they don't have a fractal on. I hope that makes sense. I'll try and find another example. Alright, so here's another example. We're waiting for, look, we're bearish from this break. So we're keeping an eye open for the next break to the upside. We get this, but it goes through a wick with a fractal on, so we keep resetting it, and then we get the body break, so then we'd be bullish. Again, here, we're bullish on this leg, this bullish little leg. Clearly keep breaking to the upside, okay? Keep making higher highs and lower lows. Sorry, higher highs and higher lows. So we're then waiting for the break to the downside. We go through a wick with a fractal. If this fractal wasn't here, we would have broken to the downside on this closure of this bearish candle. But we don't, because we have a fractal on that wick, and then again we have a fractal on this wick, so we keep pulling it down, and then eventually we do get this break on this candle closure. So then we'd be bearish, and as you can see, price starts coming down. Like, this break just determines your higher time frame bias, because most of the time, if we're not consolidating and you're just looking at the most recent break of structure on the 4 hour, you're going to be trading with the trend, and that's what we really want. So again, just to go over, there are two models. The entries are completely the same. The only difference is the bias for each one. So for the full MEC, which I'll be teaching in this series because it's just simpler, it's just the most recent breaker structure on the 4 hour for the bias. But then for the hybrid, we encapsulate the daily by looking at the most recent 5 candlesticks, not including the open. So let me just do a quick example so you guys can understand it a little bit. I'll probably make a separate video on this, or a separate kind of bootcamp video maybe explaining this, because you need to, it does go pretty deep and gets a little bit complex. But basically for the hybrid, we're looking at the most recent 5 candlesticks, so not including the open. So we don't count this one, so we go 1, 2, 3, 4, 5, the open of this, so from here down to this close of the first. So we are moving down. Can you see? So we'd be bearish. Then we go to the 4 hour and look at the most recent 3 significant highs and 3 significant lows getting lowered. As you can see, we get the 1, 2, 3, 1, 2, 3, bearish. Same for the 1 hour. And as you can see, we went bullish here. So we'd be misaligned, because they all need to align to make us be aligned for the day. So we were misaligned here. The full MEC and the hybrid have very similar results. The only difference is the MEC goes on a slightly bigger losing streaks, whereas the hybrid has more of a steady kind of equity curve. They're both, to be honest, the full MEC has made me more art this year. So it's kind of like whatever works for you personally. I trade both, but so I can get the benefits of both. But I highly recommend just sticking to the full MEC for now, and then maybe, you know, once you get some funding and once you understand the game of mechanical trading, you switch to the hybrid. Like I said, I'll make maybe a separate video later down the line, but for now, just stick with the full MEC. It's a really good model, and you're not really missing out on anything, trust me. So just stick with the full MEC. So that's kind of all I wanted to go over today, just the bias. So we just look at the most recent 4 hour breaker structure. Super simple. Like I said in episode 1, I trade a super simple model, but it pays me. So you know what I mean. So you now know session times. So you now have the fractals indicator. You know what pairs you're trading. You know your session times. You know the game of mechanical trading a bit. And you know the bias. So in the next episode, I'm going to go over the entry. This is where it gets a little bit, not really complicated, but goes a little bit deeper now, because the entry is probably, well, it's not that complex to be honest, but it's like the biggest part on my model, because you can do the bias within like 5 seconds every day, but the entry is where you have to like be saying alerts a little bit and watching the charts. So we'll get into that in the next episode. Hope you enjoyed this and hope you got some value out of this. If you're not already in my Discord, get involved. I don't sell a fucking course. I just want to see you guys winning. Peace.